Florida.
Okay. 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 Okay, good. So we'll go on. I just wanted to meet everyone. So you know, and then we're gonna have a question and answer time that's gonna come where you can kind of ask me any question you want. And I usually make up answers. I usually don't know the answers, but I've been making up answers so successfully over the years, you won't know whether I'm telling you the truth or not. But anyway, I will just tell you a little about me. I started really before most of you were born. I started IRS in 1973. Who was born before 73? Yeah, just nothing. You and Teresa, what year?
My mom.
What
my
year
mother.
were you born?
7.
What year?
67.
So when she's 67, so when she was 5 years old, I sat at an IRS desk, and I've been doing resolution cases really ever since that date. So
Wow.
you can imagine how many resolution cases I've worked. I probably worked at IRS about 10,000 of them, and I don't know how many I've worked. So resolution is really second nature. And to all of you, I want you to know something. You are in resolution. This is the biggest time right now in tax resolution, and I'll tell you why. IRS has saved up for 2 years all their COVID cases, and they're starting to send everything out right now. So right now, the last estimate that I've heard, there's about 26 million open IRS collection cases, 26 million of them. It's far enough to go all over, so you're not going to have to worry about ever finding work. So I just want to tell you a little about me and who I am, even though some of you actually you know this, is that I started in 73. I worked as a revenue officer for 10 years. Many people, think they can take these classes and take this class and that class and this class, and all of a sudden no tax resolution. Let me tell you, the biggest lie is that you're going to take 3 or 4 of these classes and be prepared for resolution. The revenue officer, the first year, takes 11 full days, 8-hour days of training, plus they have a on-the-job instructor with you on every single case your first year. I would say it wasn't until 18 months that I became proficient in resolution. And some of these companies say, hey, take my course and you'll get a $5,000 case right away. That's true, but the problem is you're not going to know how to work it. So that's a real big myth in this industry. A matter of fact, if any of you aren't on my Facebook page, the group, you probably should. I started out with 3 people. Matter of fact, the 2 people I work with, and that grew to 4,600 people. And the reason is people were giving wrong answers in other groups. So what I did first is I aligned it with former IRS agents, because there's a big difference. There's book knowledge going to these classes, and there's knowledge how the IRS is going to actually work the case. That's really big, how IRS is going to work the case, because you can have all that knowledge, but someone who's worked at IRS is going to get you to A to B quicker than anyone else. Plus, we know where to push the IRS, and other people do not. So if you're taking these classes, it's useful to kind of feel your way around. But at the end of the day, unless you line yourself up with someone who worked at IRS, you're really never going to know how to get behind the curtain. It's just a fact. And that's why the group was started. I think I have 150 to 200 former agents, and that's why I put them there. So it helps. You can tell if a former IRS agent has responded to a question or someone who's taken a lot of classes. If someone's taken a lot of classes, they'll answer with the IRM. Someone who's worked at IRS will just tell you how to work the case. There's a huge difference. So just remember, this is the best time to get into this. So in my first 10 years, I worked the non-filer program and the narcotic trafficking program. So during the, you guys weren't even born. I'm looking at you guys thinking, you don't even know what I'm talking about. There was a big thing called the Cocaine Cowboys. Anybody ever raise your hand if you know who the Cocaine Cowboys are? Yeah, that's what I figured. This happened that long ago. How many people have seen the movie Scarface? Anybody see the movie Scarface? You guys haven't seen Scarface either. Okay, well, the Scarface was about the cocaine cowboys and the infiltration into South Florida selling cocaine. So I worked a program at IRS that we actually went in and we used to seize the assets of the cocaine dealer. I have many stories about that. I won't go into them today. I want to get in mostly to your training and what you need to know. So anyway, that was probably a highlight for me, going into the home of drug lords. And when you see all these homes on the intercoastal, what drove all the homes up in South Florida is that the cocaine and drug dealers would come in and buy the real expensive homes on the water. And many of them were using boats and everything to unload their product. There wasn't the surveillance there was back then. So they'd bring in these huge cigarette boats and they were doing loading right into their homes. So that's when the prices really took a spike here. So anyway, that's the time I worked there. So in 1983, well, I left in 82. I started my practice in 83. So actually, this last August, I will have been doing this for 51 years. So let me just go over why is now the best time, because there's so many IRS cases. Like I said, 26 million cases are coming out. I do not know why people want to do tax returns. I don't know. I used to have to prepare tax returns when I was at IRS under 6020B in the code. When the code, if people didn't have their records, I would have to go ahead and prepare the returns. I'd rather take this pen and stick it in my eye than to do a tax return. Let me tell you, tax returns are very, very time intensive. You got to send the mailer. You got to make sure the programs. You got to know the programs. You got to send them out. The client's got to review it. And then you got the exchange going back and forth. When you actually look at the time it takes to do a return and everything that goes with it, including training, knowing it, you do not get paid enough to do a tax return. Plus, you now audit and have to keep records for yourself of everything the client does, right? You have to do due diligence, right? With IRS collection cases, you don't need to do any of that. None of that. You just got to pick up the client and work them. You don't have any of those requirements. For me, my average price point's around $7,500. We put in about 4.5 hours work on those cases. So you tell me who has a better price point. Plus, all we do has to prepare a financial statement. Now, stop me if you have any questions. Does that make sense? It makes perfect sense, doesn't it? So I just want you to know resolution eventually is the way to go. Now, here's the mistake that people make in resolution. People are so fixed on doing their tax returns and making $250 or $350 and $450, they forget about these $7,500, $15,000 cases, that are out there because they think, oh, I just better do this, and they don't know that. Well, what you can do easily is get somebody to partner up with you, no matter who that person is, and let them mentor you, put them on your site, and they can, when cases come in, learn to work the cases with that person. I will tell you, if I work 10 resolution cases, I will have made probably $100,000. How long does it take you to make that money doing tax returns? How long? It takes you a long time, doesn't it? And a lot of aggravation. All I'm doing is picking up a financial statement, calling IRS, and making sure the tax returns are filed, and I'm closing my case. So I'm not selling you on doing this. I'm letting you know that if you are doing tax returns, you are going to be labor intensive for the rest of your life. You're going to have a practice to sell. It'll wear you out, especially every corporate return extension day, every 1040 day. And the collection cases sit there with big money. Here's the other problem that most of you are going to have. If you take IRS resolution cases and dangle it behind like it's walking a dog, you're never going to get good at it. What you have to do is you have to go ahead at the end of the day, you have to go ahead and make this a priority with your 1040, or you're just going to have it dangle behind you. That's the mistake most people make in it. So anyway, I want to let you know that. So how many people here, just raise your hand, have actually worked an offer and compromise? Anybody? Has anybody worked an offer? How many of you worked? Samantha, how many of you worked?
One, and it got rejected.
Okay. Anybody else? Anybody else work an offer? And that's
Brown.
okay. It's not a big deal. So at IRS, I used to teach the offer program. I used to reject offers and deny offers. So I'm going to try to at least teach you a couple things today as we go. So one of the first things, and I'm going to have time for a lot of questions and answers. You have to, first of all, understand the IRS billing cycle. This is really important for you to understand. So when you send in a tax return, let me tell you what happens. You send in a return or it goes through e-filing. A person at an IRS desk, he punches in all the information. And when that information is officially on the computer, you have what's called a TC 150 date, the date of the assessment. If you pull your transcripts up, the first transaction code you should see there is a TC 150. That is the date that IRS actually went ahead and put this assessment on the computer. It may take 6 weeks. Now, from there, IRS runs billing cycles every 5 to 6 weeks. From there, you get your CP14. From there, you get your CP501. 6 weeks later, you get your CP503. And 6 weeks later, you get your CP504. And 6 weeks later, you get your 1058 notice. Everything you need to know is I'm telling you right now about the collection process right now. So when you send that return in and you owe money, IRS usually has 10 years from that date. IRS can extend the statute because the client has done something, a litigation, bankruptcy, collection due process, offer that extends that 10-year period of time. So during that period of time, the taxpayer is getting, when they get the 504 notice, it's time for them to take action because the last notice that comes is the 1058 notice. If you do not follow up on the 1058 notice, the computer, no one's controlling the case, systemically automatically sends out a bank levy or wage garnishment levy. Automatically, they just go out. So what you want to do is when you have a taxpayer, you want to figure out the exit strategy for that person. Now, does anybody have any questions up to this point? I want to be able to answer questions. Anybody have a question? Nothing? Okay.
Yes, sir.
So your 504, what IRS has done is during COVID, they suppressed all these final notices, the CP 504. The CP 504 tells you that if you do not contact IRS soon, they're going to contact your neighbors. They can contact your bank. They can contact your employer. But now we're making formal demand at that time. So 30 days after that, you have one more chance to appeal. And then after that, it really goes full force into the collection cycle. Now, I want you to understand, now let's pretend it's in the collection cycle. There are only 3 ways IRS will close a case. Does anybody have any idea what those 3 ways are? Any idea? There's 3 ways IRS will close a case. Can anybody maybe help me with that? Okay, you're right. You're absolutely right. IRS will close a case either by putting you in hardship, currently non-collectible. They'll put you into a payment agreement, or you can file for an offer and compromise. Those are the 3 ways that IRS is going to go ahead and close your case. Now, the 2 most likely are going to be the currently non-collectible and the payment agreement. If you want to file an offer and compromise, that offer goes into somebody else to work. So if you are calling the 1-800 number, they're going to ask for an IRS financial statement, a 433-F. It's a lighter version of the revenue officer 433-A. And when they get that, the person on the other end of the phone are looking at 2 things, your assets, and they're looking at your income and expenses, and they're going to make a determination from there whether to put you into currently non-collectible or hardship. Those are the only two things that will happen. Does everybody understand that or have questions about that? Nobody? Okay, so it's really pretty simple. So what is the key when you get a client? The key, if you get someone says, I owe money, the most important thing you can do the day you get the client and the day you get retained is very simple. Is what is the exit strategy you're going to use on that client? What does that mean? The very first thing I do when I get a collection case, once they pay me, I want their financial statement. I want to know what IRS is going to look at. And then if I get the case early enough, I can change the IRS financial statement to put them in a better place with IRS. We'll go over that when Teresa pulls up the 433A itself. So at the end of the day, IRS is sending out a bunch of letters, right? When you get the 504 notice and the 1058 notice, it's time for somebody to call IRS, or systemically, the IRS computer will self-generate a bank or wage garnishment levy. Let me talk about the levies, because there's two types of levies. There's a bank levy and a wage garnishment levy. They're both on separate forms and they both are reacted to differently. If you were to get, let's just say that Samantha here gets a bank levy, the bank holds the money for 21 days. On the 22nd day, they send the money to IRS. Why do they have that 21-day freeze? Because they want Samantha to call IRS and work out their problem. Why did she get a levy notice? Because she did not react to the two last notices of IRS, the CP 504 and the 1058. Remember, nobody touches these cases. IRS systemically sends them out. Now, you may say, where does IRS get the information to levy a bank? Because banks and employers send in that information to IRS, and IRS holds that information for 6 years. If you ever pull transcripts up and you see where they banked and all that information, IRS just simply gets the information from the employer or the bank, and they go ahead and send the levies out. They may send one, they may send three. IRS does not want a levy. They only do that because the taxpayer has not responded to IRS. Does that make sense? So once again, there's two types of levies. What's one levy? What's the first levy called? And what? I'm not going to go to somebody answers the question. I gave you two. What's the first levy? A bank levy. A bank levy. Remember, there's only two places that hurt you. Your bank, right? And your wages. So those are the only two things. Once again, IRS just wants you to call them to end the case. So as soon as you get a client in, you want to look at the financial statement, and then you want to get a transcript to see where the case is in the system. If it's a 504, you know you got to act quickly. If it's a CP 14, a 501, you can kind of take your time working the case. So once again, you want to always pull a transcript to see where the case is. And when you pull a transcript, there's two things that IRS you must do on every single client that contacts you. If I'm out there knocking on the door and I say, hey, I'm with the IRS, what I used to do, my first two questions are this to everyone. Are all your tax returns filed? Number one. Number two, are you current on your withholding? That is, do you have enough withholding taken out? Or are your or you have ES payments? The first thing you need to do with the clients are make sure you get them current immediately and all the returns filed. That's the first thing I care, because now I know that taxpayers compliant, and now I just have to work on the back problem. Does that make sense? So the first two things you want to do, you want to pull the transcript to find out where the case is, and you want to get their financial statement to see how the case is going to end. I'll get to this financial statement in a minute. So does everyone understand? So as a revenue officer, what I'm doing, I'm investigating how they're going to pay me. The only two things I want to know about is what is their income and what are their assets. And I want to know where they're spending their money. How can IRS go ahead and collect money? Does that make sense to everybody? Okay, I just want to make sure. I don't see some pictures of other people on here. I don't know if they have any questions. Please feel free. You can open your camera up. Yeah, I have a question from Stephanie. Go ahead, Steph. I have a thumb. Is that a thumbs up or you have a hand up? I guess that's a hand up versus a thumbs up. Okay, so you're allowed to raise your hand. So let's talk about the IRS federal tax lien. So if you owe over $10,000, IRS technically can file a lien on you. A federal tax lien is filed in the domicile in which you live, in the county domicile. If you owe over 10,000, IRS technically can file a lien. Sometimes it's over 25,000. They've been flipping back and forth. A federal tax lien is not a levy. A federal tax lien gets placed on the courthouse just to let people know that that person owes IRS. It does not go on your credit report because they're not allowed to put it on your credit report. Does the lien hurt anybody? It only hurts somebody if someone's doing a property search. And how long are those liens good for? The liens are good for 10 years, barring you extending the statute. And I've told you there's 4 things that extend the statute: bankruptcy, litigation, collection due process, and certain payment agreements. So does everyone understand that or have a question? So everyone, go ahead. Is anyone trying to, is someone talking? I don't know. Teresa, is anyone talking or anything? I just want to know. Okay. Okay, so you understand the collection process. So right now, my guess is IRS is going to be sending out at least 10 million 504 notices. That is, people are being told if they don't call IRS, they're going to get a bank levy and a wage garnishment. So if you have a practice or you have filed a tax return and those people have owed money, they're going to get their final notice to contact IRS, or IRS is going to send them a bank levy or wage garnishment. That's why if you look at my group site, everyone says, oh, great, the 504 is coming. Why is it important to a practitioner that the 504 notice, it tells people they better call somebody to get help? So it's like our calling card to let people know they need help, like from us. Does that make sense? Anybody have any questions about that? So you know about the federal tax lien and you know about the 2 levies, the wage garnishment. Oh, I didn't cover the wage garnishment levy. You usually, a person, IRS will send a wage garnishment levy out, and that's kind of a very hold on, that's a very simple thing, the wage garnishment. IRS just takes your wages. They take about 80% of them, and they keep the wage levy is a continued garnishment. It doesn't stop at all until you satisfy IRS. So remember, the bank levy, there's a 21-day freeze. On the wage garnishment, it's just a continuous levy. It does not stop. So there's 2 types of levies. It's important to know the difference. When your client gets a wage garnishment levy, the problem with it is it usually went to their boss or their HR department. Now everybody knows they're on IRS is on their radar screen. So you have to try to prevent that from happening. Okay, Patsy, you have any questions, or Juan, anybody? Yes. Did you have a question, Patsy?
I do.
Yes.
When you were describing the federal liens, you said that there are 4 instances in which it can get extended past the 10-year mark.
Yes.
You said bankruptcy, collection due process, payment agreement. What was the last one?
Offer and compromise, being out of the country. There's more. I'm just trying to cover the basic. So, you know, like if you're not in the country, the statute, it freezes. So okay, you got to be in the country for the statute, in fact, to run. So
how long is that statute for being out of the country? How long do you have to be out of the country for it to
First day. If you're gone 10 days, it's 10 days. I just had a guy call me. He had an old IRS debt. He's been out of the country 18 years. So the statute got extended those 18 years because he wasn't in the country. So, yeah. So
Okay.
now let me tell you another thing, that if you owe over $59,000 right now, IRS will go ahead and they will notify the State Department to lock up your passport. So those are really good cases because people usually have the money. People who are traveling have the money and they need their passport. So IRS issues what's called a 508C letter. You can just write that down. And says if you don't resolve your case with IRS, the State Department is going to revoke or they're going to deny your passport. I get a number of calls from people who've had their passport revoked, and you're not going to get them back anytime soon. Why? You have to call IRS with a financial statement, and the IRS is going to have to close that case either with a, once again, the three ways I've talked to you about: filing of an offer, getting the case in a payment agreement, or a currently non-collectible. And then at that point in time, IRS will notify the State Department and the State Department will release the hold. Now, if you don't contact IRS within 90 days of the passport letter going out, you have to apply for a brand new passport. What they did about 8 years ago through the FAST Act, it was really fast that they did this. Basically, IRS says, hey, we're going to slip this in legislation. So anyone who owes over right now, it started at 52, they call it serious tax debt, up to 59,000 now, they're going to get a 508C letter. So those people will jump and do anything they need to get their case closed. So anybody have any questions about that? Has anyone ever got a 508C letter from on their client who owed over 59,000?
Not officially, but I'm pretty sure because he hasn't brought in the statements yet. But we did just have somebody that is filing 2016 and forward in returns. And the reason why he wants to do that is because he said that the IRS contacted him and told him that his passport was frozen. I mean, I'm sorry. He tried to renew his passport and they told him that there was a hold.
Now, when I hear that, what she just said, you guys may have missed something, but she said he contacted her to get their 16 forward filed. The problem is somebody did file a return because he owes over $59,000. So when you hear that, you probably know IRS filed a substitute for return. And the only reason he's getting is you don't get your passport revoked for unfiled returns because they don't know whether you have a refund or not. They've done that. You will find there's a created assessment one way or the other on that year. Does that make sense? They can't do it. So let's talk about unfiled tax returns. Really important that you hear unfiled tax returns. So IRS, does everyone know what policy, this is very important, what policy statement P5-133 says? You don't, but the IRS policy statement means you only have to file the last 6 years. That's it. No matter when somebody comes into you, you only have to file the last 6 years. Now, smart people in this business, if someone comes to Samantha or Teresa or Patsy or Juan or Stephanie, who's ever on here, you don't go ahead and take the case and start filing now. You want to wait to January because you flip over another year and you lose that other year. So it's 6 years to file. So you only have to file 6. Now, let me tell you this. If a revenue officer gets the case and they find out it's an asset case, let me tell you what that means. Someone came to me as an RO. They didn't file the last 6 years, but I found out they had a house with a lot of equity or they had assets with a lot of equity. 6 years may not good enough for me. I may have wanted 10 years. So the revenue officer, in conjunction with their manager, can extend the 6 year period of time. That's why, as practitioners, you want to file the last 6 years as soon as you can, because you don't want the case coming down to the field for the revenue officer to work. Okay. So any questions about that? So the policy statement P5-133 simply means you only have to file the last 6 years. Now, here's a really, really important question to that, is you have to be careful on adding a spouse on there if in fact she hasn't had a lot of income. It's very rare. I put a spouse on the filing of those 1040s if in fact she doesn't have any income. Why? Because I don't want anyone else on the assessment. I only want one person on the assessment, so IRS can't attack the other spouse. So do not file a tax return. It's a joint tax return where the wife makes little money and include her, because it doesn't make sense and you're not helping the debt situation. Plus, you can always amend the last 3 years and file a joint return. Am I going too fast, or are you kind of gripping? I don't know where you're at and where I'm speaking. Does any of this make sense, or I'm just trying to throw a bunch of
So-
stuff at you? Go ahead.
I have a question. So you say, if they're not making money or making little money, we don't add it. But then the last 3 years we do an amendment and add it.
You could. I never add a wife or a spouse on a joint tax return. Now, if they're going to pay it in full, you can do that because you can save the tax dollars. But if you have people who can't pay the tax after 6 years, you never want to include a spouse. If you can keep the spouse off the assessment, never want to do that ever. I see so many people, they call me and they say, Michael, my husband and my wife, and we both owe money together. And I says, well, let me ask you something. They owe $150,000, $200,000. I says, let me ask you, did the wife work? No, they just put her on the return. I am wondering why you would file a joint return and put both people on there if you can't pay the debt. All you're doing is exposing that other person to what IRS wants to do. So be careful and do not file joint returns on unfiled unless you know they're going to pay them in full. Does that make sense?
I just want to clarify that.
Yes.
By saying not to file a joint return, you're not saying completely leave them off. You're just saying to file married filing separately.
Yes.
Okay.
Yes.
Just wanted to make sure so everybody's on the same page.
Yeah, you make sure you don't have that person on that tax return. IRS can only deal with the one person and not the other. There's a bunch of reasons I don't want to go into that kind of gets more into secondary stuff. So let me tell you about if your case gets put in hardship. What does that mean? The word is currently non-collectible. If I were to call IRS, I says, oh, Teresa owes debt right now. Okay, they take her financial statement. We're going to put her in currently non-collectible. What does that mean? It means that IRS will take that case and put a hold on it for a couple years. They will put a freeze on that. That means that they've looked at the case and it's going to stay in uncollectible. We don't know how long that case is going to stay in uncollectible. The algorithms read those cases and determine when those cases have to come out to IRS. If as long as you're staying current and you're filing returns, you can keep those cases into currently non-collectible. Now, let me tell you all a little trick. Have any of you had a taxpayer that had their refund frozen or taken by IRS? They filed a return and they lost their refund. That happened to anybody because they owed IRS? Well, if it hasn't happened, it will. How do you get around that? You change the W-4. You do an adjustment to the W-4. So at the end of the year, IRS does not get any money. Okay, does that make sense? You just don't make sure they don't have a refund. The IRS cannot use their offset in that situation. How long do cases stay uncollectible for? Could be 2 years, could be till the statute runs out. Now, what at some point in time, IRS has to clear out all their currently non-collectible cases. So what do? IRS a couple years ago, well, more than a couple years, says, let's send these cases to private collection agencies. There's 3 of them to go ahead and try to shake them down for money. If your client gets a private collection agency letter, there's nothing that they can do. They make 25% of whatever they can shake the client down for. They can't report on your credit. They can't levy. They can't garnish. They don't contact IRS. They have absolutely. If we get a call from a private collection agency, personally, you do all what you want since this is being recorded. If it wasn't, I would tell you other things. But since it's being recorded, we personally do not call back the private collection agency because they have no power whatsoever. So I just want you to know that. Anybody get a private collection? There's 3 private collection agencies, by the way. So the more resolution you do, the more resolution you're going to get into this. So, okay, everyone understand that. So we covered the lien, we covered the levy. Does anybody have any questions right now about the collection division or any cases maybe you have, or any questions? Anybody at all? Don't be afraid to talk. I'm trying to help you all and answer questions that you may have. Okay, we'll keep going then. I'm going to talk to you today about the offer and compromise. The offer and compromise is pushed by everyone. Settle your debt, settle for pennies on a dollar. Well, remember, I worked the offer and compromise program. I used to accept offers and deny offers. Yes, pretty little me used to accept offers and compromise. So IRS is only looking at 2 things. They're only looking at your asset base. And let me tell you, this is a cardinal rule for the offer. If the person can pay the tax off because they have equity in things, IRS is not going to settle the debt. Cardinal rule. Let me tell you what I mean by that. If you have a house and that house has $200,000 equity in it, and you owe $100,000 to the IRS is not going to accept the offer and compromise. Why aren't they going to accept the offer? Because they can pay the tax. So many people call me and say, hey, I want to settle the debt. They have money sitting in their pension, money in their IRA, and they have equity in the house. IRS isn't going to settle. The offer program is set up for people who do not have the assets to go ahead and pay it. Last year was the lowest amount of offers ever went in the IRS, and that's because of COVID. I think IRS went ahead and received 39,000 offers in compromise, and I believe they accepted 13,000 offers in compromise. So but now they're going to go back up because IRS is going to start pushing against these debts. So remember, when you get a case in, you want to evaluate the financial statement. And as soon as you get the statement, we're going to go over it in a minute. You're going to know whether you can accept an offer or deny. So as a revenue officer who worked the offer, I'm picking up that financial statement. The first thing I'm looking at is they're current on all their filings, and if they're self-employed, they're up to date, or their withholdings up to date. The next thing I'm going to do, I'm going to look at the offer form itself. I'm going to look at, I'm looking at their assets. Do you have any equity? Okay, let's look to the income and expenses. This is very important. You all hear this, very important. If you don't remember anything I hear today, I want you to understand something. That IRS has what's called a national standards program. Very critical you hear this, very. If you want a payment agreement, if you want to be put in hardship, or if you want to go ahead and have an offer accepted, IRS wants to know what your income and your expenses are. That's critical. But IRS is not going to allow the expenses that you want to go ahead and accept. So Teresa, would you pull up that 433A page 4? Because I want to show you the art of working an IRS case. As soon as she pulls that up, I'll go over that with you.
Can you repeat the name? The national
The National Standards Program. Thank you. National Standards Program. If you're working collection cases, I'm going to work through Teresa's case right now. I'm going to pretend we're working her case to show you exactly what the national standard. She's going to pull up page 4 of the 433A so you can all see that. By the way, this teaching that you're getting is everything that I've learned in the last 51 years. You're getting it all in an hour. So I only want page 4. That's the 433A OIC. Yeah, I need the 433A. Everybody does that on me. Everyone tries to slide the 433A OIC. Yeah, I need the 433A. And I'll tell you what, you'll know this. By the way, the form Teresa pulled up is if you're filing an offer. But my training tool for all of you is to go ahead and look at the 433. This is worth thousands and thousands of dollars to you, and it's going to save you many, many times if you understand what I'm telling you. It's so simple. So we'll wait for her to pull it up and then we'll go through that. Teresa, are you trying to pull that up? Okay, I didn't know whether she was. There you go. That page is gold to you. Does everybody see that?
Mhm.
Okay, so let's say you populate the left side of the income, and let's just say for kicks and giggles here, the wages are $8,000. Now let's go to the 433A page 4, and this is what you must understand. If you want to know anything about resolution, this is the page you want to know. Where IRS suckers everybody is they want you, could you hover over actual monthly expenses? Teresa, just put your cursor, wave your cursor up, 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 up. Yeah, line, go up, 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 up. I'm sorry, go up the other way, go to the top. Up to the top, right there. You were right. You see where it says actual monthly? If you go to total living expenses, there's two sides right there. You see them? They're actual monthly. Do you see that? I'm not getting any feedback. I like a little feedback. Thank you very much. Now, next is for IRS use only. What do you think is more important? What the taxpayer puts in for their actual monthly, or for what IRS use only is? What do you think is more important?
The IRS use only?
What IRS use is. Why? Is because IRS is only going to allow certain expenses in there. They don't give a crap what you put for your actual monthly expenses. All they care about is what their IRS use only is. Now, this application is true for the 433F if you call the service center and the offer and compromise. So we are going to go ahead and walk through Teresa's case. So Teresa, I'm going to have you I want you to, maybe if you can freeze this screen or open a tab and put in IRS National Standards for food and clothing. Let's see what that is. So you're all going to go to the national standards. She's going to populate IRS National Standards for food and clothing. Let's see what that pulls up to be. So Teresa will be on that and you'll see what she allows. IRS has 4 national standards. If you go over those standards, IRS doesn't care. You got to use what IRS is going to use on you. You're going to learn that right now. So let's. She will populate once again. You can do this too. IRS National Standards 4, and then we're going to look at each one of the 4 categories. The first category is for food and clothing. So as soon as she has that, you'll know exactly what they're going to allow.
I don't know where to find it.
Okay, why don't you give me control? Let me share the screen. Let me look at it.
I can share the screen if you want. I give access to.
Yeah, it's easier. I have worn a groove. See what I'm typing in? IRS, well, if I can. Okay, IRS national standards. You see them all there? So let's see what IRS puts that you are going to be allowed for food and clothing. Let's see what they put. There they are right there. You cannot use any more than what IRS is putting. So in Teresa's case, how many in your family, Teresa, that
4.
live with
4.
4? So how much is IRS going to allow Teresa for total food and clothing? $19.93. You see that? So on a financial statement, IRS is gonna populate. Now, if you only have one person, how much does IRS allow you for one person? 841.
466. Oh, 841.
841.
Oh,
See that?
yeah.
Two person,
Is
13.
that monthly?
Yes.
Okay.
Very good question. Is that monthly? Excellent. So let's go back and let's look at the IRS allowable living expenses. Oh, that's going to be big. IRS living expenses. So we see the food and clothing. Wait, there's another one here I want to get. I want to get here, housing and utilities. This is going to shock you. Teresa, where are you at? You're in Illinois, correct? Okay, so I populate Illinois. You're all going to do this at some point. I populate, they're putting, by the way, if that's too loud, they're putting in a seawall down one of our canals here in South Florida. So let's go back to Illinois. What county are you in?
Cook.
Cook. So in Cook County, how much are they going to allow for Teresa for food and clothing? I mean, for housing and utilities. They're going to allow her, she has 4 people. They're going to allow her $3,026. She only had 2 people, which most people do. They only have 2576. Let's go back. If that gets too loud, let me know if you hear that. So let's go IRS national standards for okay, let's look for transportation expenses. This is what they're going to allow for ownership. How much are they going to allow for a car payment for one car? $629. And if you have a second car, $1,258. So let's go back to, oh hell. Where are you, Teresa? Where was I? The IRS national standards. Hold on. Oh, I got to get the 433A. Is that banging too much or not?
No.
Okay. They always put this OIC first. It drives me nuts. Hold on. No. IRS 433. Come on, give it to me, baby. Give it to me. No. Okay, let me take this out. So let's go back to page 4. There we go on page 4. So what you know, no matter what you put in for your actual monthly expenses, IRS is going to scrub those, and they're only going to use the standards that they did by the national standards. So you all understand that?
Yes.
Okay, so that's
would it be recommended just to use those amounts?
You can't, because depending on who has your case, IRS is going to want to show proof of those.
Oh, okay.
Okay.
Okay, Mike, is it safe to say that, like, if my food and clothing is less than the national standard, should I use the national?
No, yeah, you use the national standards for food and clothing. IRS will ask for housing and utilities. These are maximums that IRS is going to allow you. If you don't have them, you've got to use less. If you're going to have more, then IRS is not going to give them to you.
Oh, okay.
Make sense?
Yes.
So this financial statement, the minute I get a case in, I look at this financial statement, and if I'm looking at it, the only thing I care about is their cash on hand, what's in their accounts, what's in their investments accounts. I want to know what their real property is. That instantly tells me what their asset base is, and then I immediately go to this, and within 15 seconds, I will tell you exactly if the case is going to be a hardship, a payment agreement, or a currently non-collectible, okay? So this page is that important. You must figure, now let me tell you the tricks. I've got to close this, so hold on just a minute, okay? I have to close this because this thing will drive me nuts. They're putting a seawall in here.
Ahí en el mail, el pedazo de la carta que me mandó el tipo, dice que es
Yeah, a boat came over here and took off someone's seawall across the dock, and that was it. Now, let me tell you the tricks that you play here, and you'll see. So if a person I know so IRS looks at these allowable expenses, and let's say IRS only allows $4,000, but let's say you got $5,000 over on this side. Can you all see me? That means there's $1,000 left over a month to pay IRS. No one's going to want to pay IRS $1,000, right? So what do? Some people don't have a car payment. So what do you think I have them do? I have them go out and buy a car. Have them buy a car, and they can spend $629 a month on the car. So let me ask you, if you can't pay your IRS debt, would you rather give IRS $629 a month, or would you rather smell the leather of a brand new car? What would you rather do? You'd rather
Get me my new car.
get me your new car. So the other thing, I have them jack up their health insurance, or I have them get dental insurance. So I go down, I have them maybe bump up their life insurance. My job at the end of the day, if I can, is to get them down to zero. Whatever they have left over right here, I should say right there, that's going to go to IRS. So if I have 5,000 over here, 4,000 over here, and I have 1,000 that's going to go to IRS, I start finding things legally that I can have them add. So at the end of the day, I can get that down to this to put them in uncollectible, or maybe to do an offer and compromise. But you can't wait to the last minute to do that. You have to go ahead and start the planning early. So as soon as you get the case, you got to put them into you got to get the financial statement. Make sense?
Mm-hmm.
So anyway, that's this form here is gold to you. This form here makes you all your money. If I have money in a bank account before IRS calls, I make sure that money isn't there legally. If that money is sitting in there's nothing I can do about real property. So your job is to go ahead, get this financial statement, especially on the income and expense page, and become a wizard and transform the page before it gets into IRS's hands. That is what is effective tax representation. Now, if you're a business, let me just show you this. If you're a business, you put your monthly income here, you put your expenses here, and down here on line 89, whatever you have left over, that jumps right to here, net income to business. It jumps right here. Now, let me tell you the IRS loophole, a little trick that most people don't know. And I'm teaching this to you, and this is gold to you. What IRS did not do, if you see my cursor, IRS did not put in a period of time they want this income report. You see that? That was a big mistake. You know why? I can use a 3 months, a 6 months, a 9 months, or a year. So what do you think I'm going to do? I'm going to do a financial analysis of either 3 months, 6 months, or 9 months, and I'm going to put the worst period of time right here. Okay, that's how that works. You all see that? It's a little trick that you can use, and you can help the client immensely. The reason, and let me get out of this form, so get out of this. I'm going to stop the screen share. So the reason I'm telling you all this is you can't work your collection cases by yourself. You can't do that. You don't know how to work the cases. Now, after you work 5 or 10, you can start working them because you're not going to know how to transform the financial statement. So once again, when you get a client in, you want to pull the transcript. You want to see where their case is within the system. You want to make sure their 1040s or 1120s are all filed. You want to make sure they're current on their estimate tax payments or on their withholding, and you'll want to secure the financial statement all within a day or two. That's what you want to do. And now you're prepared to work the case. Does that make sense?
Yeah.
Anybody have any questions? I can't hear you. Teresa, if you're talking, I can't hear you.
Okay, so can you hear me now?
Yes.
Okay, so when a client has a home and it has equity on it, and I know that if the equity is high, is not going to qualify, but would it be advisable to the client to say, get an equity loan before we start
Yes.
the process?
Yes. Yes. Let me tell you, unless the statute's running out, there's so many little factors on every case. If he has 8 years into the statute, I don't tell him to do anything. If he can, many people, I tell them, just get the equity loan and pay it off. You can write the interest off. So it all depends how young the statute is and what the rest of the financial statement looks at. You know, as a revenue officer, I'm going to go out, I'm going to look at their income and expenses, and I'm going to look at the value of their assets. So I make my judgment based on those two things. By the way, I don't care about how much debt the taxpayer has. I don't care how much debt they are to credit cards. I don't care about any other debt. I am a debt collector. The only thing I want to know are assets and income. I don't care about anything else. I have people tell me, well, I got $50,000, $80,000 in credit cards, making a credit card payment. And by the way, IRS does not allow for private education tuition. They're not going to allow that either. So those things are getting kicked out. So the idea is to look at the financial statement and start changing it as much as you can. And sometimes you may have to tell the taxpayer, hey, you're going to have to get a line of credit to pay this off because there are no tricks. Remember, you are not wizards. Your job is just to get the financial statement, change it if you can change it, and then get the case closed from there. Be very truthful. I have never taken a case in my office where I know I can't help the person. I just tell them, hey, I can't help you. I advise you to pay the debt. So when you get proficient at this, in 15 seconds, you're going to be able to tell your client exactly how their case is going to end. So anytime a client calls me, once I get that financial statement, I'll exactly tell them how that case is going to end. There's no ifs, ands, and buts about it. So that financial statement controls everything, everything, everything. Does anybody have any questions? So the next thing that I want to talk to you about is how do you get business for yourself? You get business by having a designed website that attracts tax resolution company. Most people who I first meet and I mentor with, I see their website, I would throw them in the garbage in 2 seconds. The websites are horrible. Most people find you, believe it or not, guess what? On your phone. You must have a clean website and a clean phone application for people to call you. What does everybody do when they're not at home? Everyone in public is what? Doing this. They got an IRS problem. What are they doing? You've got to have a really, really clean phone application, and you have to be able to address the problem and solve the need. So your number one thing, if you want to go into resolution, is you need to have a nice, clean tax resolution website and a landing page. That's what you need to have. So when people find you, they'll say, this is exactly what my problem is. The big buttons right now are unfiled tax returns. Believe it or not, half of my calls are for unfiled returns. Yep, unfiled returns. Then I go for offers and compromise are next, and passport revocations, and we get audits because we're designed to handle IRS audits. Those are the top 4 inquiries that I get at our office. And I have about, I don't know, I have about 2,500 YouTubes out there, and probably 550
Versus tax resolution.
hours. So
Tax resolution.
Okay, so does anybody have any questions? So you need the website. You need to find any mentor that will walk through this. You need to stay with a mentor about a year. And then after that, when you can start working cases, you wean yourself off and then only work the tougher cases. Like hardships and payment agreements, most people can do them by themselves. But when you got an offer and compromise or business tax debt, that's when you really have to have, or trust fund penalties, that's when you have to have somebody grafted into that. I'm going to explain the trust fund penalty before I go, so you all understand what this is. Everyone gets confused by the trust fund penalty. If a business owes 941 taxes, the IRS wants to come out and set the individuals responsible to pay the debt. They want to set them up with the trust fund recovery penalty. Now, as a former revenue officer, I don't know, I've worked maybe 1,000 of these cases. It's my job, it was my job to go and determine who's responsible. First thing I look for, I went for the checkbook. I went to say who signed corporate resolutions, who had the right to hire or fire, who really ran the business. It's really easy to find out. You know, it doesn't take a lot of investigation. When you go to people, they say that person did it. So at the end of the day, you're looking for who controlled the business. Let me tell you what the trust fund tax is, so you know. The trust fund tax is the withholding, and 1/2 of the Social Security only will be imposed against responsible persons. So if you have a $10,000 941, for instance, if you were to break that down and say, what was the trust fund tax? The person responsible will pay only the withholding and 1/2 of the Social Security. The match Social Security and penalties and interest all go away on the trust fund recovery penalty. So the trust fund is not double, it's actually a tax reduction of around 35%. Everybody understand that? Does anybody have any questions? Anybody work a trust fund case?
Not yet.
Okay, but that's good. But if you get them, you have to know that IRS has come in and have looked, have determined what the penalty is. Now, let's say someone comes into you and they have, I'm just randomly flying on things so you can know other things. If someone has had an IRS audit and they didn't like the way the audit goes, there are 2 different ways to reopen the audit. You can ask for an IRS, what is it called? God, I forgot the name. IRS, I forgot. I'll get the name, it'll come to me, but you can file an offer and compromise down as to liability. And there's another tool, God, it escapes me. Another way, there's 2 ways to reopen the audit. So even if somebody went ahead and got audited, you can flip that audit if you have to, okay? Anybody have any questions? I've covered a lot of stuff. So let me tell you how IRS audits people. This is a good closure, so you'll all know why IRS audits people. So IRS has to have a common thread to audit people. So IRS has an algorithm called the DIF function. It stands for DIF, discriminatory index function. What that does, there is an algorithm that scans every single tax return that IRS gets in. Scan that tax return, IRS will know in how many different areas and how much that person fell out of the national average. So let's say on your tax return, you had a Schedule C. They looked at, God, your loss was high. Maybe you took too much interest. Maybe your advertising was too high. It builds up these flag points. And when you reach a certain threshold, the DIF score gets really high. And IRS sends batches of these to the service center, pulls them. They send them down to the local office for review. Revenue agents, whose job there is every 6 weeks, is to decide what tax returns that they want to go ahead or look auditable. They send those cases back to the service center with a cover sheet, says this one, this one, this one, this one. The service center then looks at that office and says, gee, they have 20 auditors. They can handle 300 audits. So we will take the low-hanging fruit of those 300 people and they will send them down to the local office. So the DIF score, the DIF score, the discriminatory index function score, actually goes ahead and scores the tax returns for audit. Does that make, I know it's not, does it make sense? It does, because that's in fact what IRS does. That's how your tax return gets pulled for an audit. It's by falling out of the national average. What two groups of taxpayers get audited the most? It's low income. You may want to say, gee, that's not fair. Well, it is when you find out why. There's many let's say frivolous tax practitioners, and they put down all the credits they can, so they get large refunds. And that's the biggest group. And let me tell you, on all your PTIN numbers and all the tax returns that you file, IRS has a log, a record, an algorithm that knows how many refunds you gave out and how many credits you use. In case you don't know that, you should know that now. When they come out for a preparer audit, they will have a list of 25 or 50 people, and they say, we just had 2 calls yesterday. We want these tax returns. We want to see these returns from your office. They will know that you are a person who abuses the credits, and they've hooked up with your number. So when IRS comes out, they already know the tax returns that are going out. And so IRS's algorithms were never like this, but 4 or 5 or 6 years ago, they kept adding filters and filters and filters to them. So now they can pinpoint and target practitioners that are giving too much away in credit. The second group of people who get audited are people who make about 250,000 who are sole proprietors. Why? Or maybe small LLCs. Why? They know that's the biggest cheating. They know that people decrease their income and they increase their expenses. So IRS, if they're pulling DIF scores, discriminatory index function scores, like I told you, that is the biggest group of people that tend to, let's say, I don't want to say cheat, but they take advantage more of the system than other people. So that's why you get audited by Internal Revenue Service. Isn't that something? Any questions about why? Makes sense. No human hand looks at these, really. The computer now is doing all the work, and I'm sure with AI coming out, they're going to fine tune these tax returns. So every time they go out, they're going to have low hanging fruit. Before, they used to send batches out now, and then they used to take that batch information and they would come out with their audit standards. Now they don't have that. They get all the information they've collected on all these Schedule Cs, so they know right where the aggressiveness is being taken. So the first, yeah, go ahead.
I have a question. So I know in the IRS, when you look up your PTIN, it shows you how many preparations you filed in the year. Is that like this can you find that information, like the credits and stuff, on the same area, or is it like something completely different you have to look up?
You won't know. IRS will have that number. They will know every single tax return that you prepared, whether there was a credit or whether there isn't a credit. So IRS has their own internal logarithm. Matter of fact, they would figure that you would know that from your own internal system. So when IRS comes out, for instance, want to look at your records, I just got the call yesterday, like I said, from 2 people. The agent's going to come out. They want to see the tax returns, and they want to see your own internal records that you've kept to do your practitioner due diligence on the cases. IRS, if they come out on 25 cases, every one of those 25 cases will know. They come out in batches of 25, by the way. They won't ask for. The guy yesterday was amazing. IRS wanted all 524 returns that the person pulled. They do that a lot of times if people are splitting fees, if people are in low income areas. The credit area is really being abused. I mean, they've been taking the same credits for people for 5, 6, 7 years. They never stop. So IRS needs to shut down both the practitioner. And what happens to those people are sad. IRS comes out, sometimes they'll shut the whole operation down. They'll assess penalties and interest. Then you got all your clients that are really pissed off that you went ahead and now you got the clients on you. So you have everybody on you, and then you may lose your license. I know I gave you a lot of stuff today. All I'm trying to do is put folders in the back of your mind so you at least learn something. I could drill down on something, but there's probably maybe 15 topics I covered. So my goal was just to maybe just touch on a couple of those that may, resonate with you. So does anybody have a question or want something drilled down just a little more? Thank you, Maria. Anybody have any questions?
No, what was you said that you have a YouTube channel?
Yes, my YouTube channel is Help from a Former IRS Agent. It's really funny about YouTube. My son, I didn't tell you, I have been on Fox Business News twice. My website is 777irs.com. Somebody can take it in there. I will look at the chat questions in a minute. I can't do two things at once. Yeah, I've been on Fox Business News twice, ABC, The Briefing Room, News Nation, Newsmax, CBS. I've been on a bunch of TV stations. So my son said, "Hey, Dad, why don't you start a YouTube station?" Well, I don't mind the camera. Matter of fact, the last 4 TV interviews I've done on national news. One was with 2 of them with Trump's former advisors. I was just sitting right here. I was ready to leave the room, and they called me, and I sit in my underwear. I know it's too much information for you, but I get a coat here, and Marie combs my hair, and then I really go from there and I do the interview. They tell you where to adjust, what to do. Like right now, if I'm doing a TV interview, I know exactly what I'd have to change my back. That's where my head has to be for a TV interview. Because sometimes they put you, I with George Papadopoulos, and it's just a funny story. I was going to the beach. The beach isn't far. I was going to walk to the beach, and they asked me about a week, 2 weeks before this, what I thought about this issue with Trump. I always tell the truth because you can tell if you're off a little. It was about the weaponization of the FBI. And since I work for IRS, I kind of understand what that weaponization could look like. I am literally 2 feet from going out that door, and I get a call from a Newsmax or News Nation. They said you're on in 10 minutes. Well, I'm like walking ready to go to the beach. I got a towel on. So Marie goes ahead. I keep a brush here. I keep a brush for you guys. I don't have any hair to brush, but I have a brush. What the hell? And yeah, sure enough, within 10 minutes, I had George Papadopoulos and 2 of the head of Trump's advisors. It wasn't a Trump thing. They were just talking about IRS weaponizing the FBI and IRS. So yeah, it's been fun. So my son said, "Hey, Dad, why don't you start this YouTube station?" I didn't want to, I thought that was, just for other people. But listen to me, YouTube is the #2 search engine in the world. Google is #1. YouTube, it's owned by Google, is #2. So I start this station. It's help from a former IRS agent. And all of a sudden, I got 2 things yesterday. No, not yesterday, about 2 weeks ago. I have over 10,000 subscribers and over 550, 500,000 hours watched, which is just like shocking to me. The lucky for me, I don't have to write my scripts down. I've done this for so long. I just talk like I'm talking to you, and then boom, just like that. So that's a sure way. Yeah, what's a question, Mary? I'm going to have to read these chat. Yeah, you can get one-on-one training if you call me. I'll show you how to do a YouTube. Let me just look at some of this chat. Can you read some of those, Teresa, so it's easier for me? Yeah, like, I'm sorry, what did you type to get the form?
Sorry, Maria is the only one who asked if she can have like a one-on-one training.
Yeah,
And
they call
also,
me.
she's saying that is a very good information, and she came in late, but just so everybody knows, I'm recording this and I will post it on our Facebook page. Okay,
Yeah,
and then if anybody else has like questions and stuff like that, Mike is also in the group, so you can ask questions too. You can always send me a message, and we can help you. If you have cases, we can help you with the cases too.
Yeah, just call. If you have a case, you should call Teresa and let Teresa get a hold of me. And then I work with Teresa and her daughter, and I can work any of these cases, through her. You will learn so much. And let me just tell you this. Let me tell you, the money is in resolution. You can met out these tax returns all you want. Some of you are deep in your practice, like Teresa and Samantha. They're very deep in that, and it's sometimes hard to jump away. But you can either make $7,500 on a case, or you can do maybe, I don't know, 50 tax returns. It's up to you. The average collection case takes about 4 hours, 4.5 hours. So it's up to you how much work you want to do. Like I said, I'd rather poke my eyes out than do a tax return. I don't know how you did it. I praise you guys. I can't believe you guys do tax returns, but I'm proud of you. So
So how would I start? I have a question. How would I start doing tax resolution?
Well, I would take as many classes online. Who asked the question? Do you know?
Stephanie.
Stephanie, I would take as many classes as you can, these classes that you see. And then when you get a case, you should call me. And I teach everyone shortcuts. You're never going to learn from these classes how to work the cases because they don't know the secrets. They don't know the tricks. So
Okay.
has anybody taken a resolution class that was good that you can share with Stephanie? I don't want to say I don't have to take them because obviously I was a teaching instructor. I call them the alphabet community because everyone's got names and alphabets for this, and that. I'm sure if you join my Facebook page, I don't even know. Does anybody know what is the name of my Facebook page? I don't even know what that is. I'm shocked I have 4,600 people. Teresa will put it up, and then you can just go ahead and join that. And you can ask on that group, what are the best teaching classes there? But if you get a case, you need to call Teresa, let her call me, and then we can get started.
Just posted Mike's YouTube channel. So if you guys want to go in, click it and join. He has very good videos there that you can follow. One day when you're cooking, when you're putting your makeup on, you can just click and listen and you will learn a lot. He is a very nice guy and always willing to help to everybody. And for those who also wants to learn a little bit more about resolution, for the first year, we are going to hold a conference in Denver in June. So it's going to be a Spanish tax map that we are finalizing the details of the conference. So we're going to be posting. I'm going to be posting a little bit more about it. We only have, I believe, it's going to be only 50 space for us. So I will be giving more details as soon as we get all the details finalized.
Yeah, I think Teresa, her daughter, and a team, you guys are going to have tax resolution is the thing of the future. I am telling you, there's Old Testament and New Testament. If you are just doing 1040s, God bless you. But if you're going to make larger money, and let me tell you, the Spanish community is dying for people to know tax resolution. There aren't that many people in Spanish that teach tax resolution. But you're not going to do this unless you get a mentor to help you. So you got to have the website, you got to know how to find clients, and then you have to work the cases. So yeah, your resource will be Teresa. She will know all that. I think you have a team, right, of 5 people ready to get together to go ahead and go. The Spanish tax mob will meet with the English gringos like me. We're all going to meet together. They will have a couple breakout sessions. And you guys, I'm telling you, if you guys can get ahead of this curve, you're going to gobble up all the business. You got to get working on your websites right now and start aligning yourself up. There's that much work. 25 to 27 million collection cases sit there right now. You want to own your market and own your niche and go for it. So, Teresa, how many tax returns you do a year?
I do probably a little over 1,200, and I want to exit out already. I want to get into resolutions only because it is what Mike says. It is the future. This is like crazy right now.
You do not know how much work. If you guys actually started to take a clock and find out how much time you put in, and your due diligence, you have no idea. You're probably not getting paid what you think. So, that's it for me. By the way, could you put my my group on there too, Teresa? So if they want to join the group, they can ask away all their questions. There's a lot of people smarter. There's a lot of we have a bunch of former IRS agents.
Tammy, can you do that? Can you post it?
I'm doing it right now. I'm about
Okay.
to put the link in the chat.
We actually have two. One for federal questions only, and the other one is for the states. So if you join both of the groups, you can post questions. They're not going to answer questions about taxes, like 1040 or 1120. It's only like for resolution cases or questions that you may have.
And they're good. And I will tell you one thing, whether you want to or not, tax resolution is going to happen to your clients. And you want to be ahead of the person. You want to own your city. I'm telling you, the market is so ripe. You know, especially in the big city. Aren't you in Chicago, Teresa and Samantha? Isn't that where you're at?
Yes.
Our office is in Chicago. We live in Hammond, Indiana, but our main office is in Chicago.
So how much competition you have really in Chicago? Just what, a handful of people?
We have a lot. I actually have a Jackson Huey and an National Black right down the block.
Yeah, but let me tell you what they do for resolution and what a true professional. See, Jackson Hewitt sends their work out to other people. I'm just saying. So at the end of the day, a person 65% of the time goes local. And the fact that they can meet you. Oh, I want to tell you one more thing before I go. The most important thing that you can do is Zoom with all your clients. Zoom, Zoom, Zoom. If I can face-to-face meet with someone and I can talk to them, that means a whole lot more than speaking to them on the phone. I can only encourage you, I can't tell you enough, to Zoom with every client you have and build a relationship with that person. Those people will not leave you. Don't cheap out and use the phone when you can send a Zoom link, okay?
Yeah, if you have any questions again, send me a message. All my information is on the website and the group and Facebook too. We are trying to grow a Hispanic community to help each other. And I think that's the best way to help each other now in the tax resolution. We don't have that many that handles tax resolution Hispanic speaking. So here we are building a community among a few more my coworkers tax preparers. And we can all pitch in and help everybody to, if you guys have any cases, we can help everybody.
I did want to make a comment. I know that in the chat, there's questions about wanting to be in tax resolutions and not being an EA already. My mom does have, Teresa's my mom, I don't know if everybody knows that. But my mom does have her group where she is helping people pass the enrolled agent. She has classes available to help you pass all 3 parts of your enrolled agent test so that you can become licensed. You can reach out to us directly and we can give you guys the link, or I can actually post it in the chat and then you guys can review on your own time.
And don't let not knowing resolution slow you down. If you hear anyone that has a case, and if you're not enrolled, it's not a big deal. You can get referral fees just for referring the case and learning. So it doesn't make any difference who you are. Just call Teresa. But remember, you don't call for $15,000. We can give you answers for free. You're really looking for something that you can make revenue on, and you are going to get them. Listen, before we leave, I do want to say a prayer. I did not open with prayer, so let me just close with prayer if I could. I always do that with all my clients. So anyway, I just want to tell you, Lord, I thank you so much for Teresa and Samantha setting this up. As I look upon the people, the younger people here, I ask you, Lord, to first of all put a hedge of protection around them and their families, and a hedge of protection around their business. I ask you to give them encouragement and wisdom and growth as they go ahead and they walk into whatever they want to walk into, whether it's tax planning or resolution or continue down the path of God-forsaken tax returns. Whatever that is, Father, I ask you to continue to bless them. Once again, I thank you for your time, for listening. I hope whatever it does, you do always to the glory of God, because if you're not doing it to the glory of God, you're doing it for self, and that really is pure destruction. So to all of you, may the Lord bless you and keep you. May his countenance and face and mercy be upon all of you. May he give you wisdom and peace all the days of your life. Freedom from the angst and worry of money, freedom from angst and the worry to secular stuff, to seek his glory and glory alone. I pray this in the name of the Father and of the Son and of the Holy Spirit, and the people of God say amen. Have a good one, everyone.
Thank you.
Thank you. Before we leave, I want to let you know also that in December 11 or 12, we haven't set the date yet. I'm doing another webinar with another great person. She is a lawyer. Her name is, creo que Mikey ya se fue. So voy a hablarles en español, ¿ok? So, el 11 o el día 12, vamos a tener otra reunión así parecida a esta con la abogada Lucy Pentry en referente a los reportes que se van a tener que completar ahora en enero 1 acerca de el BOI, los reportes que se tienen que hacer todas las corporaciones, las LLCs. So, más adelante voy a estar publicando la información. Y como siempre, todos estos webinars que yo pongo en el Facebook Group son totalmente gratuitos, porque nuevamente queremos hacer una comunidad informada, una comunidad hispana que aprendamos, donde aprendamos todo. Si alguno de ustedes tiene un webinar que quiera dar y es gratis y es informativo, déjenme saber y claro, le echo un vistazo y si es algo que todos podamos aprender, lo hacemos juntos. ¿Ok? Gracias por estar aquí. Nuevamente, este webinar va a estar grabado y lo voy a estar un poquito editando un poquito y poniéndolo muy pronto en la página de Facebook. Gracias a todos y que tengan buen día.
Acabo de poner el número de mi mamá en el chat por WhatsApp, se pueden comunicar. También en la página de Facebook le voy a decir que ponga el link para que puedan ver las clases que tiene disponible también.
Ok, gracias a todos. Adiós.
Gracias.